Hello, my name is Steve Bigelow with the Candlestick Forum. Had kind of a consolidation day most of the day in the markets, but at the end of the day, they started coming back in buying, which was a good indication that we're not ready to sell off yet, but we're probably in a stage of the market where you probably want to be closing out any long positions that aren't showing real resiliency or strong patterns. The NASDAQ, after the J-hook pattern last week, traded much lower, but then came back up and closed back up above the T line as well as the 3T line. Remember, there's a very simple T line rule that as long as the indexes close above the T line, we're considered to be in an uptrend. So some of the power patterns that are going to really be effective, even though the market might be a little bit lethargic, is the J-hook pattern. Our recommendation on DRNA was based upon this J-hook pattern. And look at all the elements that we can visualize as a strong J-hook pattern. Wee little teeny inverted hammer, morning star type signal, smack dab on the T-line. Next J-hook pattern. Remember this J-hook pattern off the T-line up through the 50 gave us a good strong run. If you could be either buying on this day, which were what we recommended, or a good entry strategy is to buy on positive trading tomorrow because that tells you wave 3 is now in progress. This is not rocket science. This is just identifying where pattern breakouts are going to occur based upon reoccurring human nature. Amazon, as you can see, had a nice J-hook pattern. So this makes trading very simple. Look at the doji gap up and it opened lower the next day and started trading lower. That's where you can start taking profits because of the alert, the doji gap up. But then note that when they came back to the T line, there was your bullish harami, and you can see the trajectory taking that back up. Remember, wave 1 will be the same magnitude as wave 3, and after the earnings tonight, it's trading up here another 120 points up at the 36, I think 60 area. So basically, a pattern gives you two major benefits. One, high probability direction analysis, and two, the magnitude of the move is usually going to be much more substantial than merely an uptrending stock during an uptrending market. So our recommendation on TBIO was based on that same thing, coming out of a fry pan bottom, pulled right back to the T line and the 50, and now doing a J-hook pattern. If it didn't execute today because of the indecisive market, makes for a very easy entry strategy tomorrow. Positive trading would give you the indication that you have a doji sandwich breakout and wave 3 is now in progress of your J-hook pattern. So even if you've missed patterns like the scoop pattern, as we recognize in OCGN, where would you get into this one? Well, you might have missed the boat. However, now that we can see there's consolidation, looks like there's the J-hook pattern setting up. And what do we expect coming out of a scoop pattern? A very strong price move. What's part of a good strong price move? Consolidation and then a J-hook pattern, just giving you better probabilities that if this starts trading positive doing the J-hook pattern, we know the magnitude of this move is probably going to be the same magnitude as this move. This is nothing more than trying to keep the probabilities in your favor and having a much better perspective of when to get into a trade instead of trying to buy as it's running. So remember, the scoop pattern is a very strong pattern, as we saw in our recommendation last week of HZO. Today, BJRI, BJ's Restaurant, look at the scoop pattern, a flat handle, a pullback, an inverted hammer, in the combination of a Morningstar signal. This would have been an excellent entry point, or this will be an entry point knowing that if they trade positive, they're confirming the Morningstar signal with the inverted hammer, breaking through the handle. And what do we expect from a scoop pattern? A very strong price move. We saw the McMuffins. Last week it was laser. Morningstar signal followed by a doji sandwich, or your morning sandwich, the McMuffin. Expect a strong price move. Today it was LBTYK. There's your Morningstar signal, doji sandwich. An entry strategy would be if they opened it lower and traded it down, you didn't pay attention to it. But as soon as it came back up through the open and came through the previous day's close, what was it confirming? It was confirming the McMuffin pattern. Remember, the Morningstar signal by itself is one of your 12 major signals, implying there's a reversal. A doji sandwich implies there's more upside. When you combine the two, you've got a double dose of confirmation that you're now in an uptrend. So as long as the market indexes continue to trade above the T-line, take advantage of the patterns. They're going to produce much stronger profits than just a mere uptrending stock in an uptrending market. That'll be it. We'll see you in the chat rooms.